adjusting for.
So there are a few trends that I think I would highlight. One,
Morningstar
so far
can
from
help
banking.
make quick work.
There were many uncertainties surrounding Mackenzie Saxon Stock, which included succession planning and the takeover of Saxon Financial by IGM Financial more than 2 years ago. We recently met with lead manager Suzanne Pennington and members of her team to discuss this transition and to get an update on the portfolio. With me today is Salman Ahmed, who is the lead analyst responsible for covering the fund. Salman, can you give us some background information on Pennington and when she took over this mandate?
Yeah. Well, Suzanne Pennington was hired in 2005 specifically to succeed Rick Howson. So it was a well thought out succession plan. She came in fairly early and she was being steeped in the Howson Tattersall process. She became lead manager of the fund in October 2009, but she was managing the institutional Howson Tattersall Canadian Value Equity Pool Fund since 2005. So she has a longer track record on that and a decent track record of that.
So other than this track record, what has she brought to the table? Anything different to the team?
Yeah, well, she was leading the research at Saxon since 2007, and she was able to expand some of the methodologies that the team was using in valuing the companies. So rather than emphasizing price to equity and price to book, she expanded the process to include things such as EV to EBITDA, and more of an emphasis on the sum of parts to see whether it was trading at less than fair value.
So can we see names of in different areas of the market entering the portfolio? Can we see some resource-oriented stocks which are typically not value-oriented?
Yeah, because the process is a little bit different than what most other value managers would look at. There will be names in there that are non-traditional value names. So there is a lot of energy in the portfolio. Plus there's the likes of Agrium and Potash, which are fairly, which many value managers would shy away from.
Right. So you mentioned that she had a previous track record. She has a track record on an institutional mandate. It's very early in the stages for this fund, but can you give us a little bit of a taste of what her performance has been like?
Yeah, well, 2010 was the first full calendar year that she was managing the fund, and it was a top quartile performer during this time. So the fund returned 18.5% compared to the benchmark, the S&P Cap Composite, which was 17.6. So it was a top quartile performer, but for a longer track record, you do have to look at her record on the pool product.
Well, one of the things that we really liked about this fund when it was run by Saxon as an independent shop was a fairly attractive MER. Now that it's under the Mackenzie umbrella, can you give us a sense of what's changed, if anything?
Yeah, well, there are multiple series being offered by Mackenzie. The series that was brought over from when Saxon was independent is called the Investor Series, and that still has an attractive fees, but not as attractive as in the past. So the total MER is increased from about 1.85 to 2, and at last record it was 2.02. The more expensive series is the Series A, which has a higher trailer for advisors, and the MER for that ranges in the 2.4 to 2.5%.
Great. For Salman's full analysis on the fund, please visit our website at www.morningstar.ca.